everybody. Happy Wednesday. It's time for our chart of the week. And this week, we're going to do something a little bit different. We're not focusing on any particular stock name in general. Rather, we're going to be taking a look at the end of the month, S&P 500. Of course, Monday was the last trading day of March. It was also the last day of the quarter. So I wanted to show you this right here. And it does look like it's in trouble here. It's going to need a good month of April to dig itself out of a hole. But let's take a look at this chart and see what we're seeing here. So here's a monthly chart of the S&P 500. This goes all the way back to 2010, 2009 actually. This is a monthly chart. You can see monthly bars, and clearly the trend is what? The trend is up, right? It's bullish. Over a long period of time, we know that that's the case with the stock market, right? But there are short periods of time when that uptrend turns into a downtrend, and we've seen that happen right here. We've seen it happen right here, even to a lesser extent right over here. And this is this is being caused by weakness in the stock market, which is reflected in the MACD, right? I've noticed for a lot of years that when we get crossovers in the MACD, that tends to lead to bearish movements and possibly even a bear market. And that's what happened here in 2022. Once we got that bearish crossover here, we ended up into a long, protracted bear market for better than a year, right? And you can see that once this crossed over at the beginning of 2022, it was March, April 2022. The markets had come down a lot prior to that, but it came down a lot more after that crossover happened. We had smaller crossovers here in 2020, and we bounced right back up. This is, remember, of course, the COVID lows. And then in 2018 as well, too, towards the end of the year, lots of tariff talk as well. So what do we have currently right now? We have the month of March finished red. We did have the month of February also finish weak with the doji, and now we're below some key moving averages here, and the relative strength is coming down. Notice also that March was one of the highest volume months since in about the last 4 years. In fact, we hadn't had this kind of volume since way back in 2020. So almost 4 years, 1, 2, 3, 4, 5 years since we had that kind of heavy turnover. There's a lot of people out there who were saying that the volume levels were low. I disagree. As you can see, S&P 500, again, largest volume since the summer of 2020. Other indicators, again, here I want to show you very isolated on the MACD over here, right? And what's going to happen, right? So if we have a poor month of April, all right, which means that barely up or possibly or negative, we're going to get a crossover here by the end of the month of April, by April 30th. Right. And what does that mean? That simply means that it's a red flag alert that if we get another down month, and that would be in May, that would confirm the fact that the market is in a bear condition. We are in a bear market, right? Now, it doesn't have to last as long as it did in 2022. It could last for a couple of months like it did here in 2020. It could last longer than that. But you just have to be aware that those conditions exist, and there is a different way of playing the stock market in a bear market than in a bull market, right? You should all be aware of that. I've written an ebook all about it. I have all the conditions and all the rules of engagement in a bear market as well too. So let's take a look at some of these other indicators over here. You can see on balance volume has been strong, still strong. Looks like it's rolling over here. Chaikin money flow was strong for a good part of 2024. It was rising up then, and ever since the election, we've just been making lower highs, lower lows. It tells you what? It tells you that institutional money has been leaving the stock market in a large way. We're not down to zero, heading towards that level. It could possibly be that we are at zero by the time April or May comes around if the market continues to stay weak. We do have earnings season coming up soon, so that could be the equalizer for this downtrend over here. So we could balance that out if the earnings come in pretty good. I know a lot of earnings estimates have been cut quite significantly in for the first quarter earnings period. So perhaps we see some surprises. But by and large, if we get another red bar over here, where's the target? Well, you have to go back and look at the last couple of downtrends when the MACD crossed crossed zero, the black line underneath the red line over here, over here, and over here. And what I'm looking at here is the 50-month moving average. Okay, that's right here. That currently comes in at around 46.30. 46.30 from where we're at right now. That would be 1,000 points down roughly from where we are right now, and that would be an awful move down. But we're not here to judge things. We're just here to analyze things and see where it could possibly happen. Now, how long would a move down to 46.30 take? Well, probably it would take months, probably 6, 7, 8 months to get down there. It's not going to be out there in a couple of in 2 or 3 months. Look how long it took to get from this 4,800 level all the way down to 3,700. This dropped 900 points. Why am I looking at this 15-month moving average? It's just because it's been an area of support when the market got weak and we came into a bear market. It's been an area, a target area. Further, we are well separated from this 50-month moving average, right? And it's fine when you're in a strong economy and a bull market to be far away from that. But as we know, moving averages are mean reverting instruments, right? We have to look at moving averages in isolation, saying that prices are going to move back to those moving averages, like the moving averages act like a magnet. So if that's the case, it's continually moving up, but at a slower pace here. We're going to see this 50-month moving average act as a magnet and pull the stock market right back down to it, much like it did here in 2022. Okay, so just be aware of that. And I think there's going to be some good trading opportunities between now and hopefully maybe we're still in a bull market. I don't know if we're whatever the next phase of the market is. There's going to be some great opportunities to trade this thing. So if you have any questions on anything, let me know. Thanks very much for watching, everyone, and I'll